Good morning, Janice.
Good morning.
Today, let's talk about 5 ways homebuyers will react to average mortgage rates hitting 5%. What did you think about this one?
So it's interesting because it's a reality that it's going to go higher. And I liked it a little bit because they were talking statistics. So you'll see they break it down into statisticals about what people think.
So just to give the shout out, this was from the blog, I think, of nationalmortgagenews.com. And the author was Alina, I hope I'm saying this correctly, Alina Tarkazikis. So thank you, author.
Thank you.
And one other thing, Janice, before we jump into the five ways homeowners will react to mortgage rates hitting 5%, have the rates hit 5%? I don't believe so. I believe they threatened to hit 5% this summer and they kind of came back down. Is that your understanding?
That's my understanding from the article, is that they're expected to reach 5% by the end of the year. I mean, that gives us 15 days. I don't know that they've reached that yet.
Yeah, I think the economy heated up and the Fed I am by no means a macroeconomist, but I believe the economy was heating up all summer, so the Fed pulled the rates back down, which in turn brought the mortgage rates back down a little bit, I think. I mean, that could be total incorrect.
But it is looming that it could be, beginning of 2019, depends. It's like you said, it's all about market fluctuations.
Cool. So let's jump into the ways folks will react, please.
So the author starts out with mortgage rates reached 4% in the late 2017, made their way past 4.5%. The month of the article. She's talking about the projections, like we had said at the end of the year, being 5%. So maybe into next year. It depends, like you said, on the market fluctuations. But the data for this article was derived from a Redfin survey conducted by Survey Gizmo. So they polled 4,000 consumers who'd purchased or sold a home within the last year or attempted to do so. According to them, so 4,000 people. Then they also did similar surveys in May and November of 2017. So we're looking at data from 4,000 people to give you the information based on this rate fluctuation. So number one would be adjust the criteria. And they say about 21% of consumers said they would look into other areas or purchase a smaller home because of the rising rates, which is an increase from 18% of people a year ago. So it did rise 3% that they would look into a smaller home if the rates went up.
I mean, that just seems commonsensical. If prices go up, you can afford less. I mean, I don't see... Sorry to be so snarky about it, but that seems kind of obvious.
Absolutely. I totally agree with you. Because when your interest rate is higher, your monthly payments will be higher. Right. Everything is higher. So you might have to scale back a little bit.
Yeah, folks, a lot of new buyers... I'm sorry, let me just jump in. These are really topics that I cover in my book, How to Buy Your Perfect First Home, available on Amazon. But a lot of folks come in thinking, I can afford a house that costs this much, $100,000, $300,000, $500,000, these sort of absolute dollar amounts for the purchase price of the house. But that's not really the number you should be looking at. You really need to be thinking about, what can I afford per month? And the reason for that is because that's what the mortgage company, unless you're buying all cash, that number is what the mortgage company cares a lot about and looks at your credit history, your income, and all that to help you determine. And when interest rates go up, meaning the amount you'll be paying per month on your mortgage, that kind of changes all the numbers there. Yeah,
absolutely. That monthly payment is so important when you go in. So number two would be to pick up the pace, which is in contrast. They say about 19% of home buyers said they would increase the urgency of their home search in order to purchase before the rates rise, which I guess again makes sense, but home buying isn't a quick process. But they would say they would get out there a little bit quicker, 2% down. It's down 2% from a year ago, those statistics. So they're going to get out there a lot quicker, try to do it faster before they go up.
To me, this feels like trying to be a market timer, if you're familiar with that term from stock investing.
And that I'm not.
It's when you think you can buy low and sell high because somehow you know when the stock will go up and go down, right? Here's the spoiler. Most people can't, or almost nobody can predict.
Right.
So similarly, this article was written in June with the idea that it would increase to 5% at the very least by the end of the year. That hasn't happened. So that's just sort of indication that it's very hard to predict. So, picking up the pace to try to time the mortgage interest rate market seems unlikely to be accurate. So just go at whatever pace seems to fit your life, I would suggest, generally.
Absolutely. So number 3 is slow things down. And as you just said, this was written in June. Those that slowed it down, well, they did all right because it's still not up to 5%. It says here that 23% of house shoppers would slow down their search to see if it would cool off, which is up from 29% the prior year. So just like you said, they flip side, they played a different angle. They waited. They're still good.
Yeah, again, that totally exemplifies that it's just so hard to predict. So just go with what suits your kids' needs, your family needs, your budget needs, your job might be changing, whatever fits your life best, probably.
Absolutely. And number 4, call it quits. So a small share, just 5%, claim they would halt their home buying process altogether if the mortgage rates rose above 5%. And I believe that's what we were just talking about, where it's still kind of a gamble because they could still go up. Right. If they wanted to buy a home, maybe it's a good time, maybe not, but 5% said they'd pull out and they would not.
What can you clear that up for me, Janice? Does that article mean that over 5% certain people would just pull out of the market because of a theoretical objection to paying over 5% for a mortgage, or it's too expensive? Like, what's the reason behind that?
That's a good question. So it says exactly that a small share of house hunters, just 5%, claimed they would halt their home buying process altogether if mortgage rates rose above 5%.
So it doesn't explain the reasons why.
It doesn't. We have to interpret it a little bit. My interpretation would be that those 5% would just stop altogether. But this does lead us to a little bit of interpretation because we don't know the actual answer.
So if it's because of a theoretical objection to ever paying more than 5% on a mortgage, Janice, I don't know if you have this perspective. I remember in the mid 80s when inflation was quite high, you could see mortgages for like 15 or 17%.
Yeah.
And on the flip side, your bank account, what do you get these days on your savings, Janice? 1%, 2%?
Barely,
right.
I think.
Back then, you were getting like 8-9% on your checking account. So, I mean, just have a longer view of just life.
A longer view, a broader view, like you said, take into account the percentages on your investments and checkings and savings accounts.
Who knows? A decade from now, people might think back wistfully of the days they could get a 5% mortgage.
Right.
You never
They'll
know.
say, I heard them talk about once this 5% rate. What is that? Because it's really high now.
So drawing those lines in the sand, like I don't know if that's productive.
No, and I think it goes back to what you said. Do what's right for you, for your family, for your financial situation. If 5% works, great. If it doesn't work and you have to wait, great. But you probably shouldn't base it on that particular percentage point at the time.
Now, that being said, if the respondents have calculated that at 5%, they simply can't afford a house that they would want to buy, that makes sense too. That
Absolutely.
totally jibes, yeah.
Absolutely. Which is number 5, the closing, is stay the course. 24% of homebuyers said that mortgage rates hitting 5% wouldn't impact their home search. So there are still 24% of people from the survey of 4,000, that said they're just going to stay on track.
So to me, that's quite reassuring that a good chunk of people are just doing what they need to do. They're not being, what do you call it? They're not letting the mortgage rate tail wag the home buying dog. I kind of butchered that.
But I think I know what you're saying. Yes. Yeah. No, but exactly. They're just staying on course. They're doing what's right for them. I'm interpreting here that they're just doing what's right. They're staying on their course. They have a plan. They're going with it.
Very good. All right. Thanks again to nationalmortgagenews.com and to Alina Tarkazikis. Great article. And again, my book, How to Buy Your Perfect First Home, is available on Amazon. Go check it out. Talk to you next time, Janice.
Talk to you soon.
Bye now.